Our next guest not only called the U.S. market bottom back in March of last year, he's also known for predicting global investing trends. So with global uncertainty swirling, we turn now to Barton Biggs, managing partner at hedge fund Traxis Partners, who joins us from his office in Manhattan. Barton, make sense of what's happening in the market for me right now. You find reasons for optimism when you see stock buybacks, when you see retail sales this morning coming in, showing maybe the consumer is continuing to buy. But then you've got the overhang of China possibly overheating, the overhang of debt issues in Europe. What does this make you think about the marketplace and the recovery right now?
Look, it makes me think what I always think, that there are always uncertainties. But I think that, yes, there's the uncertainty of China, whether China is overheating or not. And I think that the Bank of China and the Chinese authorities are doing the right things in terms of gradually tightening, gently nudging up interest rates, and that in all probability, China is going to have a soft landing. And I think the other big issue, of course, is just what you were talking about earlier, Greece. But I think the Europeans sent the right message, and they said, if you will convince us that you're going to practice some discipline, then we'll take care of you. And I think that's going to happen. And meanwhile, the U.S. economy, the ongoing numbers are good, and there's every reason to believe we're in a strong recovery. And Asia is in a very strong recovery, and Europe's a little disappointing. But on balance, I'm often wrong, always in doubt. But I'm pretty bullish here.
You're bullish now, but that level of uncertainty that's out there, when you see the euro falling off as sharply as it is, when you have these questions swirling about whether or not this is a rolling debt crisis, it does put somewhat of a lid on optimism here. Why do you think that the market is allowing this to weigh into optimism to such a degree right now, if you still think that the fundamentals are there for recovery?
Because investors, including hedge funds investors, have memories, and they're still licking their wounds from what happened in 2008. And the ongoing data shows that there's been a lot of short selling, and that hedge funds have reduced their net long significantly, and aggressive investors, long-only aggressive investors, are still relatively conservative. People are nervous and apprehensive, and that's what, if you're an optimist, as I am, that things are going to work out, that's what provides an opportunity.
Well,
and look, if it
sorry, go ahead.
If it goes the other way, I can change my mind, but that's the way I feel now.
Well, what would make you change your mind?
Well, change my mind if it became apparent that the Greeks were not going to practice any kind of austerity, and if the Europeans and the IMF backed away from helping them, and we began the risk of a real contagion of sovereign credits, that would definitely concern me in a major way, and I would certainly be very concerned if the Asian and U.S. recovery began to falter. But I don't see that happening, and I'd be concerned if it began to appear that China's boom was turning into overheating, and that the People's Bank couldn't control it.
With the euro falling the way it is, does that provide some of the devaluation, some of the depreciation that some say could help Greece? I mean, does that change your outlook on Europe?
Yeah, I think it does, and you have to wonder if the reason that the economic recovery in Europe has faltered in the fourth quarter, if it wasn't because the euro has been so strong, and so a little weakness in the euro is good. I mean, a collapse in the euro would be a disaster, but a little weakness is probably good for European exports and for the European economies.
All right.